All right, you got me? Yeah, it's my alpha tick. You got me, AR? Can you send me the link? I got a couple people that want to join and I can't get it pulled up here. Yeah, a little technical difficulties. Guys, we'll start in 1 second. Y'all hear my all right. Let me get my computer set up. Sorry, we had a little issue getting logged back into YouTube. My computer did a reset. So I'm just, guys, we're just streaming the 1 minute in queue while we're waiting. Again, there's a lot of garbage in here that you might or might not need. To watch. And I'm finishing up. A couple things on the chart. And then we'll get going and run through this. Going to be super unofficial. I want to go through, give you guys an opportunity, one, to kind of see how the PVI is set up for this week, and then ask questions. We've already started rolling. Again, we don't do this and open it to the public until after. We don't want everybody and their brother front running us on our levels. I spend about 10 hours a weekend doing this, so I'm sure everyone can understand. I got to get PWG lows, 54.81, 54.81, 54.81.72. Yeah, and I usually do this ahead of time. I just didn't tonight or last night. Weekly plan. We'll zoom it over here. All right, are we ready to go? We got a few members. And I won't know your YouTube name from your Discord name, and it's not a big deal. Guys, you can talk in YouTube, or you can talk in workshops. Don't talk in trading floor, because I know guys are still in there trading. AR, did you post it? Yeah, let me post it in Reddit. There's some people that were asking. We'll give them a few more minutes. Guys, go ahead and ask questions if you got questions before we get started. And if my tick strike is bothering you guys, I can turn it off. It's just tick data. It's basically audio, so I don't have to. I can hear by programs when they start firing. Again, you kind of train your ear audio to listen in. You definitely don't want to get hear an audio lock alert while you're flying helos. That's not good days. Oh mercy. All right. My OBS Studios got duplicate. Checking it all. Yeah, good. EJ. Yeah, and again, welcome. You know, we're not for everybody. Um, Daily ranges. We'll talk about first touch counters. That's a little bit more price action specific than I think where we probably need to be for today in this. I really wanted to go through PVI and OPM and answer some questions. We got a lot of new members, and it's again new terminology. I mean, it's a whole new language. So, you know, first and foremost, not everyone is here in the business of selling theta. That's fine. Um, this has been my bread and butter, my baby. Um, Literally since I started selling theta back in 2006, 2007 as a way to generate income for clients when I ran my own portfolio as a registered investment advisor and then turned into, went on full blown with a hedge fund. Um, and my thing about this is really, can we generate ranges each week, and basically have at risk a set amount of money, with a set amount of income desired for that week, and if we can, how much money can we generate from it? What's our drawdown look like? Is it a get rich quick scheme? I get a lot of flack on Twitter. I got banned from Theta Gang and Reddit because everybody's saying I'm trying to sell a service. I'm not. I spend 10, 12 hours a weekend. I do my homework every freaking weekend. And so for those that are in ITG, they see me post the trades and they're like, well, why do you take this? Well, it's not blind luck, although blind luck helps. And it's better to be lucky than good. For our new members, I've been doing this in the market since 87. I've been a full-time day trader. I used to teach day trading back in 1996. Got medically retired out of the military. I was as a attack helicopter pilot, 2002, 3, 4, 5 until I retired. I was trained the trainer for the Thrift Savings Plan for United States Pacific, Army, Navy, Air Force, Marines, and Coast Guard as the Thrift Savings Plan rolled out as a TSP for the military. Taught finances and investing in that. I've got a CFP. I've got my first two stages of my CFA are done. I just never finished. I've got my master's degree, engineering degree from West Point, economics from West Point. Again, blah, blah, blah. Again, they're numbers. It doesn't matter. End of the day, I've been doing this for a while. I ran about 680 million as a chief investment officer. Left, started my own firm. Built up my hedge fund from about 16 million to 127 million-ish, and then sold in 2012. We closed in 2013, and that was my last paycheck. Actually, I coach football, but I donated my teaching and my coaching stipend to the school district, and I just did that as a way to kind of give back to the community where we are. And now we're kind of in that, I'm 54, turned 55 this summer, and we're kind of in that, hey, let's go build ridiculous net worth for our own retirement and help people along the way, and that's kind of what we do. So here's PVI in this week, guys, and there's no magic necessarily behind it. I'll show you some of the models, what I can show everyone. I'll talk through probability and statistics. Again, I've had a great time the last, couple months. Matthew Mickey, another retired Army officer, we kind of met through the internet, maybe 4 months ago, 3 months ago. He's introduced me some other military veterans. And again, statistical probability trades, they can be big wins. Guys, I don't care if you're an EMA guy, you're a Fibonacci guy, EMA being moving average ribbons, exponential moving averages, simple moving averages, Fibonacci's, Keltner channels, Bollinger Bands, RSI, stochastics, being embedded, non-embedded, MACD, CCI. It doesn't matter what you do. Price action is king. It always will be king. This in sports is the ball, and you got to see the ball. If you don't know where the ball is, you ain't worth a shit in basketball, football, or baseball. And you don't know where the puck is, you're on the bench in hockey. It's just the way it is. And I'm not alleviating track and field, and don't want to discriminate against the tennis players. So, but the bottom line is just you gotta start to be able to read price action. With it, we've got these ranges, and this range right now, going back to when we really first started, mid 2006, 2007. It was monthly options. There were no such thing as weekly options. We sold monthly, and we did a different strategy. As the market unfolded and volatility just dried up completely in 2011, you weren't getting paid the premium for single stock options relative to the volatility and the risk that you were incurring. So when it happened, I was like, well, wait a minute. If all of these stocks, your Walmart, your McDonald's, your IBMs, your Cisco's, more your Dow stocks back, and again, guys, this is 2007, 2008. If these stocks don't have a very good risk-reward relationship relative to the ES, SPX, SPY, then why the hell are we selling them? Why aren't we just doing the ranges on SPX? Aha, that was an aha moment. Light bulb goes off, and we start trading SPX. Since 2009, I will tell you guys this, in 2009, 10, 11, 12, and the first part of 13, all audited. FINRA audited us. It was the NSD back then, and then converted over to FINRA. But I got audited because I ran a hedge fund and I had a RIA firm, all through Interactive Brokers. And so I got audited, state auditors every year. And this whole system was audited. But since 2009, every year's been positive, and every year short of 2018 has outperformed the S&P 500 on a net basis, like post investment advisory. Now with it, the win rate is about 97.2%. And that is per year. And so if you're going to win 97% of the trades, the key is how do you manage when you're not winning? Because you're not going to win them all. Again, there is no model going to be 100%. If there is, ain't nobody going to give it away. Two, it ain't going to pay you very much money. I could go in and we could go and sell, 5725s, and we could sell the 5300s, and we could collect maybe 15 cents of credit, and that's our week. Well, you ain't going to make money there. So what this allows me to do, PVI allows me to do, is sell premium on a Sunday night or a Monday, Sunday night with IBKR. If you're not with IBKR, you are handicapped a little bit. You're handcuffed because you can't trade SPX options until opening bell on Monday. Is that a deal killer? No, not necessarily. But having the option, it's like having another tool in the tool bag, in the kit bag, right? So options are a good thing if you're a trader. So what our job is we get to trade and get paid on Monday. The better we do throughout the week, the more money we get to keep on Friday. Okay? So when I tell people, and I look at it and I'm like, look, earn money while you learn the stock market. And the reason why is if you want to learn to trade, in the event that we get pushing up here, where was the day we almost breached back here? Here, this Thursday. This was Israel launching back on Iran. This was Thursday when we almost breached. If you want to learn to trade futures, you sell premium at 52.54 SPX, and then you start trading your ass off on ES when we get up there and we start clinching. You will really learn. The reason why is, again, through trial and error process. It is much better to trade 100 wide SPX than it is to trade 250 wide. And the reason why is if you sold 100 wide and we breach by 7 points, you're going to lose $700. If you sell 250 wide and we breach by $7 points, you're going to lose $1,400. If you sell 425 wide, you're going to lose $2,800. Okay? 100, 250, or 425, you're going to lose a hell of a lot more money the more quantity you sell. Okay? So you always need to be in the frame of mind that if I'm selling premium, I want to sell wide, and if I'm buying premium, I want to buy tight. I want to buy tight calls. So if I'm trading 5-day options, I want to buy 5 and 10 wide options, debit spreads, and if I'm selling, I want to be selling 100 wide. People are like, well, my portfolio can't handle it. Well, the only reason we're doing 100 wide is because the amount of buying power it takes to sell 100 wide is significantly less than to sell naked. Are you buying longs to profit from them? No, you're not. You're buying longs and you're giving up some of your premium so that you can hold back some of your buying power. So you don't get liquidated, at 3:48 on a Friday afternoon when we're right at, the strike. That's the whole name of the game. Now, in doing this, and I've traded with Tammy. Again, Brad, I'm with you. The reason why is we used to be part of another Discord, a big Discord, and we grew it. They started making, $70,000, $80,000 a month, paywalling. None of us were getting paid, and we just bolted. We left and started our own here and started charging. But because of that, there's some people that don't necessarily want to see us build a YouTube channel, get friction in this business. And so they complained that my profile had a link to my Twitter, and my Twitter had a link to my Discord, so I was promoting ITG. Guys, I will never sell ITG. It's not for everybody. I think everybody that comes in, you spend $99 a month the first month, you're going to get more than $99 worth of education. Can you get it elsewhere? Yeah, probably. Can you get it elsewhere in one place? No. Are there better Discords? I'm sure there are. Are there better teachers than me? 100% hails to the yeah. I've just been doing this for 30 some years. And I don't have anything to hide. I'm being honest and transparent with people to tell people, why certain things work, why certain things don't work. I don't know it all. I don't pretend to know it all. I try not to call out trades for the newer traders in here. Guys, when I'm beating on the table, I'm usually 25, 50 NQ contracts deep in longs or shorts, and it's a trade I believe in. So if I'm giving out a trade, it's probably got about a 98% certainty of hitting. Like today we'll go through in a bit. So this is just PVI. And again, if you don't sell Theta, that's fine. It might not be for you. Maybe you'll learn. We've had some members that joined us. They came in and they were with us for 6 weeks and never sold any of the PVI trades. That's fine. They learned to trade futures. And over that time, they were like, damn, I'm a better futures trader than I am a Theta trader. Well, you get good at trading futures. In the days and the weeks we get close to PVI, you don't stress. When we get up in there and we get up into the box and we start clinching, and I'm talking clinching. Guys, 2 years ago, I would sell 360 SPX options 50 wide. Like, 1.8, 1.9 million at risk. And then all of a sudden we'd push up to that thing. And I'm not, it's a whole new level of clenching. I mean, your sphincter is a black hole eating your entire body. You got to reach out to click the mouse. I mean, it's painful. But I've traded with Tammy for a couple years, and Art, and a group called Pong. And again, the way that they trade, they're iron condors throughout the day. It's a strategy. I'm not going to knock it. I'm not going to promote it. But they stop loss. For some of us know, is it Scotty Smith? Not, again, good people. Money, been doing it for a long, long time. His strategy is if it's in the money and he's underwater, he rolls. Well, and when he rolls for a credit and he martingales, meaning he adds contracts to make sure that he's getting paid more money for next week than he's losing this week. And that's fine for people that have, $2-3 million, like I do. But it's not fine for somebody that's got $17,000 and there is no more buying power to roll. That's not a good strategy for the majority of people. So I built a strategy that says I'm not going to roll. I'm going to defend my position because this yellow line up here and this blue line down here has a 97.2.4% chance of winning. And we're not going to lose on this one and this one. So you take 97.2, 2.8% chance of breach, and you divide it by 2, and now you're really only hedging about a 1.4% chance that we breach the upside and close or the downside and close. So when I'm only hedging 1.4%, I'm going to hedge it in a way that is productive for me and not. And so, again, I post in ITG. I'll post it in Theta or in our ITG Discord or Reddit sub. I don't mind. Again, my whole thing is that when the market opens, you got to start to understand where the market is. So I got to go down to a 4-hour chart just so I can get our levels in here. And I'm going to zoom in and go through it real quick. Weekly supply demand, okay? And this is SPX. Guys, we have a 99.97% of breaching the upside or the downside of that white box every week. 99.97%. Like every freaking week. Like here, if you bought a call debit spread like we did last week and we closed above it, you made money on your call debit spread. How wide? 5 wide. Why 5 wide? Because we're buying it. I don't want any theta. I don't want any theta evaluating. Here, if you bought it, you were in profit. Now you're in negative. Now you're in profit. Now you're back negative, and we closed in. Ron, this is the week. This is for the week. These are all weekly levels. Weekly supplied. Oh, I didn't just kill that. So with the levels, this is an auto script that we share with our members. Again, not a huge deal. We need to know where these are. And there's a couple in here, and I'm going to go through and I'm just going to check them off. There's a couple in here that are really, really important. Our 2s and our 3s. And then I'm going to put these on. And these are going to be the only ones on, and I'm going to minimize that one. And so when I look at the week, this is how I look at the week, every week for PVI. Here's my box. Well, who wins in this box? Theta absolutely wins nonstop. I'm going to go through it, Brad. Theta is king in the box, okay? Down here, theta is king in the box. What happens when we break above the box? This is a 4-hour. I like to go down to a 30-minute. If we get a 30-minute open, high, low, close above the box, we got one right here. There's a lean. Again, last week was kind of funky, right? Because of 4th of July. We get an open, high, low, close right here on Tuesday morning at 11 o'clock. 30-minute candle. That right there is telling me the lows right down here are probably in, and the market's going higher. I want to be long calls. I want to be long debit spreads. I want to be in a back ratio up here. I want to sell full 1-to-1 down here if I can get premium. And I want to trade long futures. That's what that tells me. Above the weekly box, your lean is long, long, long. And I'm already prepping. How can I profit and defend this zone? This yellow was the PWG level. I'll go through that in 2 seconds. Go back to this one. We got to open high, low, close underneath it on a 30-minute. Back into the box, back down here. We didn't really take out this low. Back into the box. This is a theta week. So by the time we broke out of the week on Friday at 10:30, if you sold premium, there ain't no premium left. If you were long calls up here or up here, you weren't getting paid for them. If you were long puts, that was a waste of money. And again, getting in the habit, for me, for everyone, when am I a delta trader? When am I a theta trader? When am I a futures trader? When do I need to change? That's market structure, volume profile, TPO, point of control, VWAP, standard deviation of VWAP, daily with VWAP, weekly VWAP, monthly VWAP, year-to-date VWAP. Everybody's going to do it a little bit different. I'm not here to tell you one way works, one way doesn't, because they all work. I will tell you this. Every indicator that's ever been made is built off price, volume, and time. Spot price, the amount of volume with the price, and the time component, right? Time component is really your theta and your charm as far as option decay. But also time component, there's certain gates, and we have rules. If we're, again, the rule for this week, if we close below weekly demand today or above weekly supply today, and we stayed above it all day on Tuesday, and we never came back and tested the box on Tuesday, in the event that we had that, we got one right here. Monday, we closed above the box. Monday the 17th of June. All day Tuesday, we stayed above the box. You're trading long. And so this is a 5-day week, Monday to Friday. We close above the box. We stay above the box. We automatically roll this PCS way up here and get paid twice on our puts. Why? Because statistically, we don't ever come down below weekly demand again. Now, 4-day weeks, they don't work. 4-day weeks don't work. This was a 4-day week, I think. We had a 4-day week back in here. They don't work. Rules get thrown out. So you just need to be aware of that. So what I do with everybody is this. Let's say you're jonesing on the call credit spreads. This is automatic. This weekly indicator, it's automatic. Again, I'll show it to you right now. Write them down. 55.85 is weekly supply. We didn't hit it today. 55.61 is weekly demand. So go 55.60 and go 55.85. We didn't hit either today. Okay, and that's it. So we didn't close above it. So we are not going to roll up our calls or our puts because right now SPX still got a 2-way go this week. And with J Powell speaking tomorrow, are we going to go back and repair some of this structure from last week? Maybe. We don't know. In the event that you sold calls and you weren't 100% sure of your calls, I'll show you something in a second. You weren't 100% sure of your calls, you've got to have a plan. If we breach weekly supply, first thing I tell everybody on hedging is that we want to buy a 5 or a 10 wide call debit spread right on weekly R2. Now, if you buy a debit spread, like last week, it was profitable until it wasn't. So what I always tell everybody is I want to buy a hedge, initial hedge. Again, I'm only trading a 20% hedge here. And that's 20% of that because that thing right there statistically has got about a 1.8%, 1.4 to 1.6% chance of breaching and losing money for me. I don't want to overhedge. Overhedging is the enemy of theta traders. That's why stop loss and rolling. Why would you roll from this week to next week? You have, excuse my language, it's after hours. You have no fucking idea what next week's holds for us. None. So why would you fold on a poker table, right? You know somebody's got better cards than you. They're going to win the pot. But you fold and you say, you know what? I'm going to double down on my bet for the next hand, and you have no idea what the cards are. That's just stupid. Because now you're basically saying, I'm going to push out to next week, and I'm going to let the market set the conditions and for the quality of my trade next week. That's a disaster. You got no idea what next week is. So we trade. I got 5 days. I got to defend. Do I have to stay up all night? I did that Thursday night when Israel sent rockets back to Iran. The futures breached PVI, NQ, and ES, and I jumped in here, and man, we had new members that were, I mean, they were already using electric razors so they wouldn't slit their own throats. We got it, but man, it was crazy. I mean, we were selling premium for $26 at the money, and then covering for 18, making stupid money. But for newer traders, they panic. So what I first do is I say 20% hedge at weekly R2 or weekly S2. 5 wide, maybe 10 wide max. Again, this is 20% of your risk down here. So if you've got 5 contracts down here, you're only trading 1 or 2 5 wide. So 2 5 wide is 10, and you got 50 at risk. That's a 20% trade. Now, what I do, because I know this system, we often go to weekly R3 and exhaust. We didn't make it to weekly R3 this week. We didn't make it to weekly R3 this week. We didn't make it to weekly R3 this week. We made it to R2, not to R3. We made it to S2, we made it to S3. So on this one, if I was panicking, again, PVI was inside PWG, the yellow. This is the one I'm short. If I was panicking, I might not have taken profit on that debit spread. I didn't even have a debit spread on that week. I didn't even put on a hedge that week. I don't always put on hedges. Why? Because when you put on a hedge, now you got 2 variables. You got PVI, and now you got your hedge to worry about. And it's super distracting. But if you go back and look at it, how many times we fail to push through weekly R3? We fail. Now we're back into May. We fail. Now we're into April. Boom, we got a R2, we got a R3, we got a PWG breach. This would have been a great place to take premium off. Long week, we close above weekly supply on Monday. We stay above it all day Tuesday. You got a call debit spread here. You take it off right here for profit. Did that ever get challenged? Hell no. Based on the rules, were you able to roll up 47.72? Roll them up here to 4,900? Sure. Were they challenged? No. I got paid. If I bought a debit spread, I got paid because I took it off, and I got paid. I get paid. I mean, paid a fucking man. That's what it's about. And you get paid, and you get to keep the money you get paid. Yeah, I'll go through and I'll post what I did so far today. But again, that's just a process. Then the second one is, obviously we talk about rolling this up in the event that we breach. But the other thing is that if we did run tomorrow, then you get to a spot where you sell more credit. And I never sell credit in this box. I mean, I do sometimes, but rarely. I will never sell a put above weekly supply. I don't care where we are up here and what day it is, there is always an opportunity for the market to come back right here. Why? This is the biggest institutional level on the upside from Sunday night until Friday. Massive institutional level. There are more hedge funds right now worried about 55.86 than they are worried about the call wall at 5,600. Hedge funds. I don't know about retail. I don't know about mutual funds. I know about trading hedge funds, the world I've been in full-time since 2000. Everyone is worried about 55.8. You don't ever see anybody talking about it. The reason why I know this, guys, they bought my company for $480,000 in 2012. And they bought it for these scripts. And they've got the scripts, and they still use the scripts. They paid me over $100,000 a year for 10 years just to be a consultant on these scripts. these weekly scripts. So it matters. So what I tell everybody is in the event that we do run, I'll sell some extra put credit spreads. But that put credit spreads is only about 15%. And it's 15% of your at risk. And the reason why is what you don't want to happen. Let's go to a week where it happens. Haven't been many because we're in this bull market. Here's one. We start selling off. Let's say you get real nervous on Wednesday, and then you sell call credit spreads up here. And the market does what? Runs right back to the box. Guys, the box is like this massive magnet. When they flip the switch, we're going there. And you got to be careful, because then if you sell extra premium right here, now your call credit spreads right here are losing more money than this was in drawdown. And everybody worries about this in drawdown. Well, the drawdown on a Theta portfolio, right here, is their drawdown into, this trade right here. Yeah. Is it real? It's monopoly money. I mean, we low printed right there Friday at 49.52, and our strike was 49.29. Now, we were, 23 points away from it? Was your sphincter pumping a little bit? Yeah, you could take your pulse from your sphincter. Your ass was clenching a little bit. You were in big time drawdown, but that was all invisible money. So what happens if you get stopped out? You just give the money to the market makers. You lost that week. Meaning you worked Monday, Tuesday, Wednesday, Thursday, Friday, and Friday you said, fuck it, I'm going to give up my paycheck. I'm gonna work 5 days, and I'm gonna let y'all keep my paycheck. I'm going home early. I will fight. I'll knock an old lady over for a freaking quarter. I will fight tooth and nail right here. How many times do we breach PVI and we come back and close inside it? Right here, this week, March. I was fighting my ass off to keep my PVI on. How do you do it? You set gates. And I'll show you. And these are the gates. We run these numbers. And so this is the spreadsheet. I'm going to post a spreadsheet in a second. I'm going to give everybody free out for the whole week. I don't care. This is no longer all-time high. This is now all-time high. As we go, in the event that we start breaching. Okay, here's weekly R2. Here's weekly R3. From weekly R3 to the first level, let me see if I can space this out a little bit so you can see. This is our PWG level this week. Guys, we ain't going above this unless tomorrow is just absolutely. Jay Powell just says, hey, the economy is doing great. We're going to cut rates in September. Election's going to go smooth, and CPI is going to be great towards the end of the week. Then we'll run through this zone. But then you're going to get up here and you're going to see baseline and the auto zones right here, right at this weekly buy target, and then we're going to run out of steam. Here's what you know. Institutions are going to start taking profit right here at 56.52. Okay? Institutions are going to start shorting right here at 56.80 to 56.75. 75 to 85. Institutions are shorting these levels. These are standalone models. Is this at risk? No. If we do run, could we run to 57.50? Absolutely. But this model right here, these two models right here, above weekly R3, that the only way we're going to rip through this zone this week is if everything in the stars align and there is some massive volume here, and it will be so clear. So how do you trade it? Well, if I'm worried about this and I got 5 contracts on, I'm going to go right here in this zone, and I'm going to add right here. I'm probably, this first one, conservative high, somewhere in here, I'm probably going to put on 5 MES. Well, what does 5 MES do against 5 SPX that are 100 wide? Nothing. It takes 10 ES contracts to hedge 5 SPX contracts, 100 wide, 50 wide, it's numbers. So 10 ES for 5 SPX. And it don't matter if they're 10 wide, 25 wide, 50 wide, or 2,000 wide. You're hedging the short side. You're not hedging your long side. So with it, I would put on some MES right here, and I'd make money up into this zone. Why? Because the likelihood of us going above weekly R3 and coming back down into it on Thursday, Friday is very high. How much money am I going to lose on a hedge of 5 MESs? None. Pennies. I'm going to fight to keep that premium. But if you go 5 ES right here and then 5 ES right here, by the time we get up here, your ESs are going to make so much money that right there, you won't even feel it. You'll be in profit, huge profit. But if the market corrects back down, you're going to lose your ass on being overhedged. Okay, and so there's a discipline with Theta. This is the discipline. Above weekly R3, if I'm short premium, I am no longer allowed, no matter how horny I get during the day, I don't care where settlement price is, I don't care where midnight open is, I don't care where Europe AM session, Asia session, I don't care, VWAP, nothing. If we're above weekly R3, I am prohibited from selling short when I got these trade on. Because the ability for the market to go higher. Because if you're short NQ or ES right here and the market runs, oh my goodness. Now you're losing on PVI and you're losing on your ES or NQ futures. So I just tell everybody, look, if it's Wednesday and we're up here and you're like, man, I'm missing some great trades, then close that trade out, take the loss, and then short till your heart's content. But everybody was like, no, I'm just going to short for 10. I'm just going to get 10 NQ points right here. Boom, market spikes. We have a buy program, algo runs, and now you're down 15 points on your NQ trade, and your drawdown just went from 180% to 400, 500% drawdown on your PVI. Don't do that. Discipline yourself. So above R3, weekly R3, if we're above it before Wednesday or on Thursday, I'm only taking long futures trading setup because my long futures, while I'm in that trade, is a natural hedge for that position. Should make sense. Again, all I teach is common sense shit that we don't commonly think about. That's all it is. I mean, I ain't no brain trust. I'm from freaking the public school system in Alabama. I ain't win a spelling bee in my life. But I can trade. And I know these numbers. And I can go through this. And so that's the process where you want to see how are the levels laid out. So overnight, let me see what I do. Let me see. Over the weekend, first thing I put out was this. And let me see if I can minimize it. So here is our model profile on the high side. So when you look at this, there's 5 models. They're just algorithms, but they're institutional algorithms. There's 5 models that are saying SPX is going to stall somewhere between 56.35 and 56.45. There's 6, so there's 11 out of 26 total models. 11 of them, not quite half, but 11 of them are saying we're going to finish between 56.55 and 56.35. We're going to finish in this zone. What do you know? Here's 85. So there's 11 of the 26 models that are telling us here. Now, in the event that we get through those models, what happens when you climb a hill on a bicycle and then you start downhill? You accelerate how fast? Really fast or really fucking fast, right? We start going. So in the event that we run through these 11 models, at what point do these bears, we're bearish up to this point, at what point do these guys say, oh man, we're going to keep going? I'm going to, instead of taking profit, I might let her keep running. Instead of shorting here, I might go long here. And when these bears, this is a bearish model, right? When these say this is the end of the street, when they all of a sudden say, no, it's not, Now you got a bunch of people that are now going to push the market higher. So we have two things on SPX on the high side this week. We've got a detached bar. We've got one algo that's saying we're not even going to make it to 5,600. I think that model's full of shit. Then we got this model way out here. This is 2 times the expected move. It's out here at 57.55. It's out here at this. We ain't hitting there. That's why there's not a lot of premium right here. I sold these for 125 this morning. And I covered one at 75 cents. And I covered one at 50 cents in Power Hour. Kind of don't think I should have covered the second one, but is what it is. Where did my... Same thing on the downside. The downside, we got 2 twin towers. And we got a space. We got a complete void here. So, if you're on the low side, the market's coming from this direction. We got an outlier right here at 55.40. Where's 55.40? 55.40 is at weekly S2. Well, that dog right there might hunt. That one's probably going to pay money. That one's definitely going to pay money if we go up. So in the event that I'm a Delta and a Theta trader, I want to be long 5 debit spread here. I want to be long a 5 wide here because we're going to get into this cluster. We're going to get into one of these 2 clusters. Right? We are going to get 55.85, which is underneath weekly R2, or we're going to get down to 55.40, which is underneath weekly S2. We're going to go to here or here this week with a 99% certainty. There ain't no way we're going to range in between supply and demand all week. And so this is how you start looking at the models. These models don't have anything to do with these levels. Now, 2 of these models is our PWG and our baseline. So PWG 56.52 is right in here, one of these 11. Baseline at 56.84 is one of these 3 models. At 56, actually one of these 2 models. So baseline's here, PWG's here, PVI's way out here. The whole objective is to buy premium, sell premium, make money here, go 1-0 this week, moveon.org. Right? That's trading. All right. So that's how it works. Okay. Anybody got any questions? So what we do in the event the market runs, I want to get a call debit spread around R2. If we get up to weekly R3 or PWG level, I'm going to probably close that trade. If we get up there on a Wednesday, I might not close it. If we get there on a Thursday, I'll probably close it. Again, price action, volume, just understanding, looking for what? If we do run north, I'm looking for exhaustion. I'm looking for a high volume profile that gets rejected. I'm looking for a PWG level that gets rejected. I'm looking for, 15-minute, 30-minute stop one-time framing higher. I'm looking for 15-minute reversal volume to come in, red volume, sell program to trigger, AM, PM system. There's a lot of different things that can tell us when we might be near a top. Again, if you don't time the top up on your call debit spread, it don't matter. You made money. Congratulations. You're going to probably make money on this one. You're definitely, if we're talking about market moving up here, you're going to make money on this one. We didn't break out on Monday, so we don't roll our puts. Again, if you watch premium will tell you oftentimes where price is going to go before price tells you. I don't know how, but the option market makers, they've got a crystal ball. They see the orders come in, they inflate. It's like the gas stations in front of the hurricane. As soon as the hurricane started showing it was going towards Texas and turning north, all the prices at the gas pump went up. And then the hurricane goes through, and they're very quick to pump up, inflate the premium, and then they're slow to bring it back down. Right? That's their business. option money maker, market makers do the exact same thing. I had a guy from Cisco in Orlando and Dallas, Texas in 1996 and 97. I had a former options market maker from Cisco come to our seminars and learned a lot from him, but he stole a lot of stuff and started his own stuff, is what it is. All right, any questions on that? So that's kind of how it works, guys. And all I do is we have the levels. The levels can help you. Again, if you start looking at it, PVI is way up here, weekly buy target 5, or weekly R5, it's up here. You just know once we get above weekly R3, we got to deal with PWG, auto, baseline, and you just start working of, hey, if this is 20 points and one ES is on 20 points, it's going to be about 20-25% of my hedge. Maybe you want to do one ES. Instead of one ES, I'd recommend 10 MES. Why? So you can scale out, peel your hedge as we get closer. Cannot tell you the amount of times we breach this intra-week and we end up closing back inside it. I can show you, but I can't tell you. Oh, AR said take a picture. So here's I don't know how to do that, bro. I gotta zoom out 1 second. Here's 2023. Man, I can't even get them all on the page. All but one. But here's 2023. Again, I'll post this stuff I post it on Twitter all the time. But I got these stats going all the way back to 2021 when we started rolling these into when we started running these into weeklies. But here's 2023. Again, hedge. If you didn't take profit, you lost money. Hedge. These are the 3 closing breaches. Guys, the PVI system has breached 3 times last year, 3 times in 2022, 2 times in 2021, and has not breached yet this year. Robert, I don't set it up to show the box. Your levels are there. Your levels are there. So I got this handy little tool called a rectangle. Guess what? I fucking draw. I'm back in kindergarten, bro. It's what I do. I'm back in kindergarten. Now, guys are asking me about the trades. A couple people have asked. Here's what I did. Here's today. I'll just bring it up. Here's the trades. Right now, I put on a call debit spread for ES this morning. I went 5 wide, 25-cent credit right here. I bought the 5630 calls at before 2300 last night. 20.75. I sold the 5 wide at $20. So 75-cent debit. Then this morning at 10 o'clock, again, these are Mountain Standard Time, so plus 2 hours. So 12:05, we had the counter. I bought the trade back at $21 and I resold it at $22. So what does that mean? It means I got a 5 wide, 56.30. These are 5 contracts. 56.30, 56.35, and I got paid 25-cent credit. I cannot lose money. This thing right here, if it finishes in the money, like last week finished in the money for $1.70. And then I got an extra $6, $5 premium because it was in the money. So it was $6.70. Extra 50 cents there because I didn't calculate that last one. So I got a call debit spread on an ES. Now, here's my call credit spread on SPX. Okay, I bought overnight, this morning, I bought some for 10 cents. This is my PVI level, 56.90. So I sold them at $1.25. It again, 9.51 this morning. It's in, guys. I mean, this is the Discord. We're in PVI trades. Here's the option pricing model. We'll cover it in 2 seconds. PVI trade, and here's my analysis. All the information for this week. So that's what I did. So I put the calls on. I bought 5. I sold 5. If there's no number here, it's 5. Why? That's the model portfolio. It's always 5. And then this afternoon, this is 12:06. Same time I did this one, I took one of these off for 75 cents. So I made 50 cents credit. Okay, that 50 cents credit on one contract pays for those 10 longs. Y'all feel me? Yeah, I don't want to spend money. Guys, I want to get paid to sit my ass in this chair. So I got 50 cents. I got no risk. I got no expense here. I right now got four trades at 125. That's all the credit I've got for the week. So that'd be what, $5 credit? So I got $5 credit right now. And then as the market dropped later, right towards power hour, and again, this is 15.40, I covered one more at 50 cents. And that's probably the lowest 56.90 traded all day. It might have gone to 45. I didn't see a 45 cross the tape, but I covered one more. So now I'm in a 5 long at 59.75 for 10 cents. And I've got 3 shorts. And then I've made 50 cents on the first one. And then I made 75 cents on the second contract. 125, covered it back for 50 cents. Guys, that ain't going to pay my bills. Okay? It works, but there's no premium right now. We need volatility to expand. Okay? This is Theta, PVI and Theta is not an easy trade when you are selling premium and VIX is down at 11, 12. It's not an easy trade. So I just, again, it helps me to kind of talk through this with you guys. And this is just one trade, one system. I just do it because I can make 1% to 2% a week. I can get paid about $1,500, $2,500 a week. It's a trade I know how to put on. I don't have to manage a whole bunch. If you can get a call debit spread here or a put debit spread here, and you can get 5 wide for $1.25, then it's a good trade. You shouldn't pay more than $1.25 for a 5 wide. That's fair value. Trust me. I'll explain it later to the other guys in ITG when we got time. Brad, I don't. I'm not. Again, I used to do it. Man, I got selling monthly premiums as a hedge fund where I was getting 2% admin fee and 20% of the profits. There was always another trade. I got shingles. Man, and they hit me in my chest. I thought I was going to have a heart attack. I was in my late 30s, early 40s. I do what I do. You know, 40, 20, 14, 21, 30, 45, 90 DTE. Everybody can do it. I'm not going to knock them. What works for them, works for them. What works for me, works for me. Again, everybody knows, ITG, my whole mantra is find your fit. What trading instrument resonates with you? What time frame? Are you a tick chart guy? Are you a 1 minute guy? Are you a 5 minute guy? Are you a 15, 30 minute? Do you watch one time framing? Do you watch VWAP? Do you watch Fibonacci numbers? Do you look for mean? Are you a mean reversion trader? Or are you a trend trader? Do you do great on trend days and suck at range days? Do you do great at range and you suck at trend? Are you great at everything or you suck at everything? You got to find what works for you. What resonates with your behavior, your mentality, your daily time commitments? You got to find that, guys. I'm going to tell you, if you want to get successful in trading, you got to go find what works for you. And the coat, the jacket, the shirt that fits you ain't going to fit everybody else. And I made a comment about that earlier today in Discord, and I posted it on Twitter. Is, guys, when you compare yourself to others, it either makes you feel superior or inferior, and neither of them are good. Anyone that feels they're better than someone else or someone else is better than them, those are both negative thoughts. Neither of them are constructive. Right? So, to wish you were like other people is to waste who you are, and you better focus on who you are. Control the controllables. Y'all know the drill. I don't need to sit here and preach. All right, moving on. Then I'm going to go to, anybody got any questions on PVI? I think I've covered it. This is where we are this week. Again, the key is going to be, are we going to be able to find some premium? I'm watching chat, not seeing anything, so not seeing questions. This down here, it's just a demand zone. Again, how I draw demand zones, 4 hours. I'm interested in that 4-hour wick right there. Why? Because we had a break of structure from the 28th of June. We had a break of structure last week. This is confirmed supply zone. I don't care who teaches you about supply demand. Bottom line is this. If we break structure from where we broke structure from is your demand zone. If we don't break structure, meaning we don't make a new swing high. If somebody comes in and tells me right now, this is a supply zone, I'll throw the bullshit flag at them and hopefully I'll poke their eye out. There ain't no supply up here because we haven't broke structure. To break supply, for this to be a confirmed supply zone, we have to take out last week's swing low. There is no supply up here. Now, is there resistance? Sure. Are we at fib extensions at all-time highs? Sure. Do they get degraded because we're at all-time high and we don't know what to expect up here? What's the volume profile look like up here? Don't know. Never been here. Zero. Black hole. We don't know. All we do know is this is our demand zone. That's all we know. Structurally, that's all we know. So again, it's one of those where you get people on the internet and Twitter and Discord and they're gurus and they're trying to teach you all this stuff. And I'm like, well, first of all, your doctrine's not correct. Anybody goes in and starts drawing a supply zone up here is just total full of shit. Now, in the event that I go here, and again, Ram Tom, that's a good question. In the event that I go here and I'm going to trade a 15-minute chart, did I break any swing lows from Friday? Did I break any swing lows? No. But in the event that we take out this low tomorrow, is there going to be a little bit of 15-minute supply? Yeah. Is that something I'm going to put my Roth IRA into? My 401k? No, that ain't supply and demand. That's intraday stuff. I just tell everybody, go to the daily. It's real easy. Go to the daily. When did we take out swing high? Right here. There's a demand zone right here. How do I find it? I go from a daily to a 4-hour. Is the 4-hour exact? No, but it's pretty damn close. 4 hours, what I find is the best time frame to draw the boxes. Can I go to a 2-hour? And again, I see people on Twitter all the time. They're great traders. Man, they will show you supply demand zones on a 1 hour, a 2 hour, a 3 hour, a 4 hour, a daily, a weekly, a 6 hour. And I'm like, okay, well, you're just making shit up now. Now you can't go and change. You can't go to all these damn different time frames. I don't even have them. I don't even know why 3 hours on there. I don't know when I've ever looked at a 3-hour chart. Now, could it be valid? Sure. Like this, 195 minutes? What the hell is that? That's like IRS taxing people if you don't take, your RMDs before you turn 70 and a half. When's your half birthday? I mean, that's fucking Congress fucking the old people. I don't even know when my half birthday is. Now you got to add 6 months. Well, what if you're the 28th of the month? Do you round up? Do you round down? Oh, by the way, if you don't take your RMD by your 70 and a half birthday, you lose 50% of your RMD. It's taxed. I mean, it's crazy. There's so many stupid rules. And again, TradingView got some stupid stuff. What's 65 minutes? Man, when has anybody ever clocked an hour and 5 minutes? For a 9.5 hour trip. I mean, it's just weird. But people, guys, you got to keep it simple. It does not need to be complex. So I go daily. I look for a break of structure. We got a break of structure. Here's one. We got a nice gap here. And everybody should be aware of this. Why? Because in the event that the market starts coming off, this gap, I usually do them in orange, this gap is open. Okay? Where did we breach structure from? Right here. And this becomes a demand zone. If you look further to the left, we breached structure right here because here was our all-time high. And it's just technical analysis, but it ain't rocket science. And people want to act like they draw a fib and they have these magical levels. And I'm like, you're so full of shit. Look, this was a swing high. We broke the swing high right here. Where do we break it from? Right here. Go down to a 4-hour chart. Here's where we broke structure. Here was it. What do we do on a 4-hour chart? I look at top wick to bottom wick, or maybe all the way to the bottom. If it's too big, you might very well go to the next candle, wick low, and I'm like, hey, here's mine. I'll put it on the internet. High time frame, demand zone. There, it's there. Now, this is going to stay with us for a while. But in the event that we go back and we close this, obviously there's a little demand zone here. But you know right now, you see this area right here? Guys, if you don't see candles touching each other, there's a problem. Okay? You're on the 32nd floor, and on the 5th floor, they left a couple cinder blocks out. That ain't good. That's the way the market works. The market likes wicks, candle bodies to candle bodies. And when you go to the 4-hour, when you start seeing areas where there's no candle bodies, there's a big gap in that. That might be on the 21st floor. I don't want an office above that. Because if and when we roll over, they're going to come back and realize they screwed up. So everybody above the 21st floor, or in this one above the 54th floor, everyone above there is, let's sound it out, PHUCT. Because this is where we're going to go to. So with it, as a risk manager, as an asset manager, I'm like, man, I would rather chase longs with futures, with Delta, and sell Theta each week than for me to start buying the market at all-time highs. And everybody knows, in my group, June 6th and 7th, I said I was going net short. And we dropped down in that next week. We did not falter and get back into the zone. What'd I say? I'm covering my shorts. I didn't add longs. The only long I have is AMD back to 180, and I think we hit 179 today in terms of calls. Okay, now we're going to move to the next one, option pricing model. I'm going to go quicker on this. And you guys aren't going to get it all. You're not going to understand it all. You're not going to get it all. But that's okay. Option pricing model. This is for Friday. It's real simple. I do it every day. I'll do it tonight at midnight. But bottom line is this. The yellow SPY, QQQ, IWM, and XLF. XLF matters to me. Jack hates it. Matters to me. But these are the baseline. Okay? All this is taking the actual price. If you guys sell premium or buy premium on options, okay, and you look down here, let me see if I can find one. Okay, here's one. Google, 47 cents. Apple, no, Nvidia, 61 cents. Which option is more expensive? I guess I could clip it and I can draw on it. All right. Which option's more expensive? New people or public, don't matter to me. Anybody? What's more expensive? Well, Nvidia's trading at 61 cents. Google's trading at 47 cents. Obviously, Nvidia is a more expensive call, right? The premium, the price is higher. However, Nvidia is 33, Google is 38. Nvidia actually has more value in the calls. Nvidia is actually trading at a higher discount, 33 relative to the index ETF, 57, 33. Nvidia is trading at what, 40% off? 44% off? Google, compared to the index, is trading at 35% off. You can do the numbers. I don't have to do the numbers. I've got PVI. It's real easy for me to go through it. So when you look at this, you're looking at, first of all, which one of the three indexes have the most expensive calls? Q's. It doesn't matter about the price, because the price gets computed through the delta, through the beta, through the theta, through the gamma, through rho. Every option Greek is in this computation. Every one of them. So I made a living as a hedge fund manager, going from 16 million to 127 million in assets, me, myself, and I, and this is what I traded every month. QQQ is the most expensive calls right now. So if you're like, well, I want to be long an index. Well, let's go and see what today happened. ES finished up what? 0.1. NQ finished up 0.19. Rusty finished up 0.69. Let's go back to our picture. Who had the best value to play calls for today? Almost 2 to 1 on Rusty. IWM, 0.69. NQ, 0.16. Who's your fucking daddy? IWM was. Value. Right? And that's what PVI stands for. Pure Value Index. PVI. I want to know what the best value is. Now, does the Rusty, if it's lower, it's always lower than the Qs? One, because of the strike price is half the value. It's always lower PVI, but the key is to figure out how much lower. And you could go in and you could do a long on the low side and short on the high side. I say who's your daddy a lot. Not being arrogant, just, it's crazy when you look at it. So if I want to trade long delta, I'm going to go through and I'm going to look for all the white options. Okay, we got blue here. CVX energy is always low, much lower than the PVI and SPX, SPY. And then we down here, and then most recently we just added these others. So Oracle, 28. Let's see what Oracle did today. I have no idea. Oracle went up 0.14. QQQs went up 0.24. Is it 2 for 1? Well, 57 to 28. Could those calls have made some money today? Keep in mind, these calls are Friday expiration. But so you can be in a habit where you can do multiple things with trading. One, you can go and we do what we call a long short. We go long the low one, the white one, we short the high one. If the premium's higher and the delta is close, they're pretty wide here, so I probably wouldn't take this trade. This is a better one. Long short on the, I like to do it on both sides, then you're really protected. But here, I sell Home Depot puts for 83 cents. I buy low puts for 0.49. Why those two? They're sister stocks. The delta is relatively the same, and I'm able to get a PVI that's very favorable. Right? Because look at the theta on Home Depot versus the theta on Lowe's. So, now, let's say I sell 83 times 3, and then I go here and I buy 49 times 5. Y'all want to do the math? $249, 49 times 5, let's just say 225. Not quite there. I make what, 40? I make 25 cents? Not a big deal. How much risk do I have? Well, I've got long 5 15 deltas, and I'm short 3 15 deltas. So if they both move up 1 or 2% or down 1 or 2%, I'm going to make more money being long 5 than I'm going to lose being short 3. That's option pricing model with long short. Again, not for everybody. If you join ITG thinking, man, I'm going to sell PVI, I'm going to trade futures, I'm going to do option pricing model, you're going to screw up everything. If you come in and you're like, look, this is what I'm good at. This is what I've done for the last 2 years, and I've been successful, but I haven't been consistent. So, yeah, so Ron, the other thing that we look at doing is we go and we find these big stocks, and we've got one person that's doing it in here. I'm a little bit leery, but here's the strategy. Let's say we go sell and we get $9 premium. $9.14 for 115 delta. Sorry about my marker. I can't draw worth shit with this thing. Now, I take that $9 and I'm going to go buy 2. And I'm going to buy 2. And I'm going to buy 2. And I'm going to buy, oh no, that's NVIDIA. Shoot, I'm not going to buy 2 with NVIDIA. I'm going to buy 4. And Apple, I'm going to buy 2. And I'm going to come down here to AMD. AMD's 80 cents. I'm going to buy 2. And I'm going to go find the blue one. What was it? Oracle. I'm going to buy 2. So here we got, what, 60 cents and 80 cents. We got $1.40. We got 37. Let's go 7. Let's call it 70, 78, 74. So $1.40, 74. Let's go 221. Round up. And let's go 240, 221 and 240. We're now at 460. Let's round up to $5. Let's add another $1, $6. Let's add another $1.20. $7.20. I'm going to buy long deltas, all those motherfuckers, for one of those. Excuse my language, but I get excited. I sell one at $9. I buy 7. I spend $7. Let's say $7.14, make it even. I get a $2 credit. How much long delta I got? 1 extra, 3, 5, 9, 11. I got 13, 15 delta trades. I got 13, 15 Delta contracts, and I got paid $2 credit. So if Broadcom goes up 5% and all these others go up 2%, 2 times 13 is 26. 1 times 5 is minus 5. I make a shitload of money. A shitload. This is a big deal. I don't personally trade it right now. We've got an $800,000 home. It flooded in end of January. Insurance isn't covering it. I've got $600,000 tied up in it. We're getting it fixed to get it on the market next month. I spend about, $36.70 an hour, 26 hours a day on health care for my mom. And then we live in a $1.5 million home. I've got major cash flow reserves where we're below our 2 minimum threshold, and it's my retirement. I hadn't had a paycheck since 2013. Under 2 million, I stopped spending, and I'm frugal. Once we get the house sold, I got an extra $700,000. We're back over 2.5. Then I'll be trading this every week, guys. And it's crazy, but sometimes you do 10. You do 10 of these, and you get $91 credit, and then you go spend $71 on these puppies. I mean, what are the chances that Broadcom goes up relative to all these others and outperforms all these others? And if, again, but you got to know it, right? And so you can't go trade Broadcom if Broadcom is not related. Like Broadcom and Cisco and Intel ain't going to have nothing to do with each other. So you want to get chips and semis, right? So you want to go down there and you want to go, okay, I might go through. Do I want to pick up Lam Research for $3.75? Or would I rather get 2 or 3 Palo Altos, PAN-Ws, for cheaper? I'd rather have 3 Palo Altos at $116 than 1 Lam Research at $375. Right? And so you can go through that, and this is what the color code does. It just lets us see. I mean, look at Supermicro. So you could sell Broadcom. You could buy a Supermicro. $9 received. $6.56 out. Let's see how they perform today. Broadcom went up $42. Supermicro, where are you at? Shit, I might not have it on this watch list. I need to get a watch list. Anybody got Supermicro? How much they go up today? Broadcom went up $42. Anybody got Supermicro? Hold on, I'll get my other computer on. Supermicro went up 56. Who won? I mean, if you bought calls today and you sold and you sold one for 9 and you bought one for 6 and the one you bought for 6 outperformed the one you sold for 9, you fucking won. Right? And you won by 14 points. Now, can you be wrong? Yes, you can. So, in my opinion, don't go, oh man, this is so easy. Guys, I don't want to be a salesperson and tell you, hey, this thing is just a bad mamma jamma. Is it? Yes, it's my baby. PVI and option pricing model is my babies. Now, I know how to trade futures. I know how to write scripts, and I know how to do institutional stuff. But these two are my bread and butter. Why? But if you don't know and you don't go back and look at Broadcom versus super microcomputer, and you don't know how they work together, are you really doing yourself justice? No, not at all. And that's why I tell everybody, look, just because we have scripts, does Broadcom respect, weekly R2? I don't know. I don't trade it. But if you're selling premium on it, you better had gone back through, for me, you better had gone back through Broadcom, and you better go back and look and see where Broadcom ends every week. R3, 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 R3. Are we seeing a lot of R3 breaches? Not really. We got one right here. They breached not PVI, PWG, the yellow. That's basically the PWG level. That's one of the 4 algorithms. PWG is volatility based. Baseline is option based. Auto is a ratio. It's a secret little ratio between volatility and options. And then those 3 feed in for me to configure and calculate and determine what the PVI model is for the week. There's a big human element for PVI. That's me scrubbing the data. I'm old school, right? I still got receipts. I still got voided out checks from 1993. Why? I don't want to get burned. But I mean, when you look at it, Broadcom breached in December of 23. And then no breaches. No breaches. No breaches. We tested it right here. Little test there on the low side. We breached it and came back in it. Broadcom's pretty much respecting the PWG level, right? We breached it here. Now look what happened last week. Or 14th of June. We breached the hell out of it. Right? And this was earnings. Globex just opened, by the way. You're going to hear my ticks. So it's breached 2 times since December. Okay? So you got to know what you're trading if you're trading it. Then I go daily. How does Broadcom look at, the inflection or the gravity points? Again, positive, positive, positive. Gap down here. So selling premium on Broadcom, maybe to offset the cost if you wanted to buy calls, you could do that. And you can do that with these models. You can go through here and you'd be like, look, if I can find one that's orange on the put side and it's white on the call side, like this one right here, Tesla, it's orange on the call side and it's white on the put side. Well, the value for Tesla is down. Tesla made money today, which means tomorrow, Tesla went up, which means tomorrow the calls are going to be more expensive. And again, I'm saying expensive, but they're going to have less value in them. That PVI is going to be higher tomorrow. This PVI is going to be lower tomorrow. There's going to be even more value in the puts in Tesla tomorrow than the calls. A lot of them are the same. A lot of them are the same across the board. Red, red. Here's one. Snowflake. Orange on the calls. White on the puts. What'd Snowflake do today? Snowflake dropped 1.5%. ServiceNow, red on the calls, red on the puts. The puts were more expensive than the calls, and ServiceNow dropped almost 5% today. Again, it's just another system, right? These are quantitative-based, analytical. It's all based off metrics. You don't have to do anything. When you look at these and you see some ideas, then you go to the charts. Then you look at your gravity points. Then you look at your moving averages, your 50, 100, 200-day moving average, your 21 daily. Then you go look at your Bollinger Bands. Then you go look for gaps, your volume profile. Then you go look for your Fibonacci structure. Then you go look for all the other stuff when you know the numbers make sense. But what do people do? Retail traders that trade options, what do? They go look at premium, and then they go look at the chart, or they hear a sexy name on Twitter, and hey, the market's green, so I'm going to buy the most expensive fucking call on the whole spreadsheet. I'm going to go buy Broadcom. It's usually the worst trade you can make. But man, hey, when so-and-so on their Twitter and they got 125,000 followers, they're telling me Broadcom's a good stock. It might be, but this spreadsheet right here is going to tell me a whole lot of stocks that have more value in them than that symbol, and they're trading at a lot less premium. Happens all the time. Okay, so that's OPM. So now I'm just going to answer questions. Y'all tell me what you got. I will tell y'all this. Let me turn this one off. I will tell y'all this. Free alpha. $16.06. Okay, here's settlement price. If you're trading futures, in Q, and you don't have settlement price on your chart, 1600 settlement, and you can go put it right here. You can put it. You can double it. That's not set, but I'll make it a little bit smaller. Guys, you need to have those two levels on there. The amount of times we go back and hit this tonight is crazy. Here's some more alpha. With where we open right now, we got a 100% chance of trading 20,669 buy trigger before 11:30 tomorrow morning. Now, that's 10 points lower than where it is. Does that mean you should ape into some NQ trades? No. But in the event that overnight we get back up here to weekly supply and we get into this harmonic zone and we get in here and we haven't touched this, is it probably a good idea to maybe put a call debit spread or maybe buy calls or maybe short some, or not calls, puts, or maybe short some MNQ for us to go down and hit this tomorrow? Absolutely. And we might not hit this, but we're going to hit this. Statistics are too high. Yeah, and again, Ron, it is a lot. And so again, I cover PVI and the all around the PVI. It's not something somebody's going to learn in 2 hours and then go make a lot of money. Or option pricing model, and you get to a spot where your first week you go in and you buy 30 contracts because Tesla had a big run last week and Tesla's options are now blue and they're undervalued. Blue just means they're more than 2 times. They're half price. They're trading at twice the value of the QQQs or the SPY, the index. And so the value, the pure value is its value relative to the index tracking stock. They're not computed the same. It's the same data. It's the same formulas, but the variables that feed the formulas is all relative to SPY, QQQ, or the stock itself, i.e. the own historical volatility, the stock implied volatility for each stock is different. That's part of the OPM model. The historical volatility for NVIDIA is a lot different than it is for Lam Research. That's part of the model. No, they're half price because the Greeks and the metrics have told us that you're going to expect twice the return per unit of risk as you would if you were trading the index. So in the event that you're not getting 2 times the return, do you really want to trade the single stock, or would you that has more risk inherently, i.e. the CEO comes out and had an affair? The CFO got, is under, federal investigation. The COO committed suicide. I mean, again, you never, a news line on NVIDIA or, what happened if NVIDIA, what would happen tonight? Pray the Lord it doesn't happen. What would happen tonight if Jensen had a heart attack? Seriously. What would happen to NVIDIA tomorrow if Jensen had a heart attack tonight? Like, it would drop 20% overnight. if that's your entire portfolio, what the heck? So that's why I tell everybody, if you use OPM, we'll update it at midnight tonight for the next one. Watch NQ. Watch NQ run up here to test the closing price at 16.59. And then watch and see if we one touch reverse, right? One touch short could be right here, or we might run all the way to 88. All the D-gens, I know all my ITG guys are in there. They're like, fucking short it. First touch, short it. Put a short at 85 quarter. Get short right at it, right above it. What? You know we're going to buy trigger. Now, we might not go to buy trigger in the next 2 hours. So, do you short it with 3 NQ? No. Can you short it with a couple MNQ and not lose sleep and not miss dinner? And not sit in front of the computer for the next 4 hours, waiting? Yeah. But when you look at it, guys, you got to realize we breached power hour high, 55. We came down to the zone. We got back up to the mid, the gray area. We pushed above it. We held the mid. We pushed above it. We held the mid. We pushed above it. We just gapped down to the mid. Guys, until we fail this mid, shorts are off the table. As soon as we fail this mid, buy trigger, set, 100%. Now, all we did was check the box here. Check. Could we go to supply right above it? Yes, and maybe. Is it worth a little short? At what price? 85 quarter? Where are we at now? 83? There. 1 NQ. Oh, two points. I got 9 ticks. Times 20. Whoo-hoo. That's all right. I just got paid to do the workshop. $180. 9 ticks. 2 points. $50. But 9 ticks. Again, no big deal. Did I know we were going to do it? No. Was it worth a little bit of risk? Sure. Just a trade. 38 bucks. 40 bucks. No big deal. But good fun stuff. All right, anybody got any questions? I got to pull this down because I'm getting messages. Oh, I got messages in workshop. Yeah, again, I'm reading some workshop questions. I can't see everybody's name. P asked a question, brand new to this. Yeah, the whole idea is this. Here's the enemy of theta. Y'all see us push up to the harmonic zone and then reject, come back down. Again, another first touch short could be in play, but don't sit in shorts long. Why? We got to get down below this zone. This is the mid zone. These are auto calculated. Crazy part is these ranges were here from last Sunday night or from Sunday night. But the enemy, Plasty, P, whoever, I see P ... The enemy to theta is overhedging. The enemy to theta is stop losses. The enemy to theta is rolling to next week because you don't control the metrics and the measurables for next week. We don't even know what they are. So the best thing for PVI is to do small hedges incrementally. Take profit on the hedge. What if you get 4 points profit on a hedge? Take it. Your PVI trade just moved up 4 points. Now we got to breach by 5 points or less for you to lose money. And build that way. That's why I tell everybody, if we get above weekly R3, and you got call credit spreads on, you're not allowed to short futures. You cannot buy puts on OPM. You only trade in a direction that's going to facilitate as a hedge so you can profit on it. PVI is designed to breach on the upside more than it is on the downside. Why? If we breach on the upside, is your house worth more money or less money? More. Is your 401k worth more money or less money? More. We still haven't breached on the call side yet. All year. We haven't even been above it. We've been below intraday. We've been below PVI. Actually, we've been above PVI one time this year, and we've been below PVI one time this year. But the time we were below was Israel, Iran, and we were not below on SPX. We were below on ES. So I made it yellow on the sheet when I go. But again, where are the PWG levels? Where's auto, baseline, PWG models? How do they line up? Where's weekly R3? Where's PVI? Again, if we get into this zone, and you're looking at the chart, if we get into the zone, where are we running to? Yeah, weekly supply. Absolutely. You got to know. You got to, again, this is our weekly box. So when you guys ask about the weekly box, here's our weekly box on NQ. This was midnight last night. Another trade. But here's our box on NQ. Well, if you look at today, it's 1 minute. If you look at today, where did we spend most of our time today? In the upper half or the lower half of the box? The upper half. Absolutely. So are we expecting it to break? Maybe we're going to break, look and fail. If we don't get above this level, that doesn't open this level. This gate's closed. This is the gate. Once we get acceptance above the gray level, we work to the next harmonic zone. When there's a harmonic zone that lines up with a weekly PWG level, you better respect it. That's confluence. That's 2744. That's probably the upside tomorrow morning. But guess what we're going to hit before tomorrow morning? Buy trigger and set. So the higher we go, the more of a mean reversion trade we're going to have. All right, I have lost YouTube. Yeah, whoever's asking. Let me post this. Guys, I got stats forever. Hold on. Here's stats. This is just PWG. But here's the thing. This might be dangerous. I've never drawn on this. Look at this. Did we touch weekly supply or weekly demand? 99.92%. On ES, 99.93%. Guys, we're going to get out of the weekly supply demand box every week. I mean, it's jail. The stats on buy trigger depend on where we open. Depends on where we open. Today we opened above it, so I don't want to give you the number in case it's not right, but it's in the 90s. Then you go look at this and you're like, okay, let's talk about weekly R3 and S3. There's a 30% chance, 23% chance NQ hits weekly R3, and a 31% chance we hit S3. There's only a 3% chance we touch both. %3 chance we touch both. but a 52% chance we're going to touch one of them. So when you think about it like that, look, 1/3 of the time we're going to go up to it. 2/3 of the time we're not going to even make it to it. If we make it to it, weekly S3, we got a 15% chance that we close outside of it from the onset. Now, here's what you got to understand. This stat right here, this column, is Sunday night. For Sunday to Friday. This column is the chances that we close outside of it as of Sunday night. Y'all understand? However, if we touch it, that's where these come into play. If we touch it, there is now a 57-58% chance if we touch weekly R3 that we close above it. If we touch weekly S3, there's a 47% chance. So there's a higher probability we touch S3 than the R3. This is from 1991 till start of this year, end of last year. We'll update this again. It hadn't changed a whole bunch. You're talking 24 years of data. It ain't going to change a whole bunch. We hit S3 more than we hit R3 on the weekly. However, if we touch R3, we have a 58% chance that we close above it. We only have a 47% chance, less than half, if we hit S3. So if we hit S3, we're expecting the market to, greater than a 50-50 chance the market corrects back into the zone. Whereas if we hit R3, you're not expecting NQ to breach. Go to ES. Statistics are lower. They're higher on S3 than NQ. They're lower on R3 than NQ. So, knowing those stats, you show up on Sunday night and the market opens and it's flat, what are you thinking? I want to be long and I want to be short. Why? Probability of S3 is 35 and S3 is 31. Probability of R3 is 23. Probability of R3 is 20. Statistical analysis can give you a long, short, lean for the index for the week. Has nothing to do with where we open. Has nothing to do with IBM or Microsoft or Eli Lilly or Salesforce. Has to do with stats. And stats are just that. Okay? Then you go to, and you can go look at all of this stuff. Oh, it doesn't. Then you can go look at all of these for saying, okay, if we hit a certain level on the weekly and you're clinching, like last week, what did we hit? R5? I mean, look at NQ. If we hit R5, weekly R5, if we touch it, we got a less than 3% chance of touching it. But if we touch it, look the fuck out. ES is even stronger. Lower probability hitting weekly R5. If we hit it, we got a almost 69% chance. If we hit it, we're going to close above it. So, are you going to short that level? I'm not. If that level's at PVI, what am I going to do? I'm going to hedge. I'm going to hedge. Why? I got a 70% chance, 69% chance. If PVI is weekly R5, I got a 69% chance we're going to close above it. I'm not playing for a mean reversion. Look at the next one. Buy target 5. Now it's 73. Why? Because when the market runs, it continues to run. And that's what happens. We get the baseline, the auto, the PWG algos. When we breach them and we come up to PVI way outside them, when we breach them, at what point do they become bullish? And now they're adding to the bullish. They're adding to the gamma squeeze. That's why PVI can get run over. It's not that the statistics from Sunday night were strong. It's just at what point do hedge fund bulls go, wait a minute. If we hit buy target 5, we got a 73% chance we're not going to come back down. We're going to keep going. That's a high probability. And so what you'll see with the statistics is the higher the level, the higher the probability that we keep running. There's only a 56% chance we close above R2. Look at this. 54% chance if we touch weekly supply, we close above it. 54, 57, 56, 59, 56, 57, 59 half, 61, 69, 73. Stats are stats. They're not objectionable. It's just, it's facts. That's what's happened for the last 25 years. When you know that, you can start to build out strategies that can help you. All right? And again, you're not going to get it overnight, P-Money. Credit spread, Sunday night or Monday. Here's the biggest thing. Going back to this. When do we open our credit spreads for the week? I don't even know why I'm doing this. I'm going to kill it. Here's what I try to do. Is VIX high or low? It's low. When VIX is low, we know one thing's going to happen. We know we're going to breach weekly supply demand. So I typically will start with a 5 long, 3 short credit spread. It doesn't matter. That's a terrible pen, by the way, on PDFs. That didn't even look like a C. 5, again, I go 5 long and 3 short. Why? Because if we're trading right in the middle, I'm going to wait for ES to break out. If ES breaks above supply or below demand, I'm going to sell one more. And then if we run up here to R2, I might sell one more. And I might get more credit on those extra 2 contracts than I got on the first 3. Why would I do that? Because VIX is really, really low right now. And you don't get paid a lot of premium. So you have to artificially create. You have to artificially create premium. How do you do it? Scalp it. Yeah, I'm using Nick's stats. I'm reading workshops. I didn't realize everybody was talking in there. Yeah, I mean, again, asking about the PVI numbers. Again, it's not proprietary. I mean, here's the PVI for this week. So, what is PVI? It's made up of auto. We just talked about PWG and all the data with PWG. Okay, and then baseline, more of an options base. Stats are not as readily available. I have them, but that's because I've been doing this for decades. So, here's our spreadsheet. All this is over here is this is a quick reference for me to look at and go, okay, are we mostly blue or mostly orange? We're mostly blue, which means the options are the widest, the most conservative of the ranges. That means baseline is going to be outside PWG. Now, where PVI falls in this, 26 models done on these 3, 26 models done on these 2. I don't do it on QQQ. And then I do 24 models on VIX. Everything outside of this, I don't run individual models on. You know what the models are for Apple? This, and then one ratio that I put on single stocks. So you see Apple's 211. Oops. 241 on the upside, 238, 238, not 239, 237. How come it's wider? Because I've run one screen on top of these for these individual stocks. That's it. That's all I do. Now, the yellow right here means there's a chance they're going to be breached. And people are like, well, why are you doing that? Well, here's what I don't do. I don't go, well, this one's yellow, so I'm going to say 5,700. This one's yellow, so I'm going to say 21,112. I'm going to artificially make this higher just because it's got a higher chance of breach this week. I don't do that. Why? I want this to be same, consistent every week. Because then we can make decisions off of it. Now, if it is, and I am trading this, do I maybe go a little bit lighter? Yeah, what did I do today? I put on a call debit spread on ES before I sold CCSs. What I do with CCSs? I sold them at $1.25. I covered one at 75 cents. I covered a second one at 50 cents. Why? Because there's a breach opportunity. Well, what if it doesn't go up? Then I don't make as much money. What if it goes up? I'll make more money. What am I worried about? I don't want to lose money. $1.25 on a credit spread is not worth losing $20,000. So if you get profit on Monday, take some off. Why? Yellow, yellow, yellow on all three indexes, SPX, NDX, Rusty, and IWM, and VIX, which means VIX can squeeze, which means VIX might breach this number or VIX might breach this number. So there's risk. How many weeks in a row have we won? Well, we're at week 28 now on this year on PVI. We haven't lost yet. So it usually loses 3 times a week. Do you get conservative? You do. 2018, I'll be honest, I was head coach of a school. We moved from Arizona to Georgia. I was head coach of a school, and we got up 23, 24% on the year, and I pretty much went flat for football season. Like right now, I could go in and we could close right now, where are we at? 50, over 50% on the year on PVI. We could go close it. And, we're up 50% on the year. I mean, how many hedge funds are up 50% on the year? Not many. Is it a great return? Yeah, I could go 50%, put all my money in cash right now, and then guaranteed I'm locking in, get 5% on my cash, and then guaranteed I'm locking in profits. And that's a strategy. You could do it. But I don't want 50%. Again, the whole objective of this strategy is to get 100%, $100,000 a year with only $50,000 deployed capital, buying power. And in doing that, the PVI portfolio pushes up to, I think it's at 227 now. But I don't change the numbers. It's not worth the headache. Bottom line is, guys, you should not put more, if you're starting out, you should not put more than 10 or 20% of your money at risk. And so probably 10% of your portfolio could go into a PVI trade. And if you could only do one SPX with whatever that 10% is, then don't do SPX, do 8 SPY, 12 SPY, or XSP if you're worried about taxation and you're worried about assignment risk. I don't do it. I know Nick is one of our contributors. He runs a ton of these stats. I just used the PWG stats that he ran. They're his. Again, this isn't me. ITG is not me. Now, those that have been in, you'll hear Moose run through Moose's strategy. You'll see Case run through Case's strategy. You'll see Nick run through what Nick trades. Little B, what Little B trades. Me, what I trade. And then all the ancillary folks. AR, Rick, Take 20, Nunya, Nano. I mean, you're going to see a lot of people trading a lot of different stuff. And it's not. And it frustrates some members. We have people join and they're like, well, I thought I was going to come in and learn one thing and make money. You're going to come in and you're going to learn more, and more might be prohibitive to you making money. You got to be able to, you got to know who you are. You got to know what you stand for. You got to know what your fit is. Because if you come in and you listen to Moose and you trade everything, then you're going to be in trouble. You know, this past week I've been spending a lot of time with Matthew, Mickey, and Austin, Clark, AC Trades, and another individual, retired vets. And again, we trade Midnight Open. They trade Midnight Open. I showed them, you know, about SET. I showed them about Asia and London, not London, Europe, AM session. Again, I use what I know as an overlay. And, you know, Austin sent me a great text, you know, Sunday, going back through, and he back tested all the way from February. And he's like, holy crap, this is unbelievable. And so again, he runs numbers and stats to Midnight Open, which is a great trade. I don't know where Midnight's going to be tonight. None of us do. But if it's above set or below set, matters. Above or below buy trigger, it matters. How much? I don't worry about the numbers per se as far as creating a spreadsheet to figure out what percent it is. But usually midnight trade, it's about 64%. Set, it's about 90%, 92%. Buy trigger, depending on where we open, can be 100%. So if you got 100% trade short down to here, and a 92% short down to here, and a 64% short down to here, wherever here is, what if 64% is here and actually right above buy trigger that's 100% today or 98% today? You're taking that trade. And that's just understanding. Does that have anything to do with price action, candlesticks? No. It has everything to do with statistics. So when you can create some opportunities with statistical analysis, stats are not biased. They're also not 100%. They're not 100% for a reason, which means you don't go all in on a trade because it's not guaranteed. But if you're sitting there looking and you know it's 100% down here, and we get up here and we check the box at weekly supply, we're at the top of this zone, and then you start seeing some volume, reversal volume, you start seeing some one-time framing lower, could you start to get in your trade to trade back down towards these levels? The answer is yes, and the answer is you should. Does it change the fact that we're about to break out of the weekly supply demand box? Not at all. It just might mean there's a 3 to 4 hour trade with a high probability for us to mean revert back down here. And maybe we're going to a spot where maybe we got to go repair some structure from 3:30 this afternoon. Maybe you're a fair value gap kind of person. There's a fair value gap right at the bottom of a harmonic zone. Here's a fair value gap. What happens if Asia starts coming off? Where are we going to go to? I don't know. Maybe you look at 1 minute fair value gaps. Maybe you use 5 minute fair value gaps. Here's why the market's so tough, right? Some people use a 9 EMA. Some people use a 9 period simple. Some people use the 8 period EMA. Guys, the stock market is the fucking Tower of Babel. And I say it jokingly, but we all trade different stuff. Our indicators are different. Our take profit are different. Everything's a little bit different. And so because of it, the market's always there. There's always liquidity. You just got to know that the market and market makers seek out liquidity. And that's how the market moves, right? We range. We have an impulse move, we range, we have an impulse move. Balance, trend, balance, trend, balance. You got to understand when we break out of balance or we break out of a range for a trend and vice versa. Yeah, again, That's not a big deal, BP. The big deal, again, I know we got a lot of free people on here. I don't care. NQ typically runs 25, from 25 to 30. And it's just a statistical anomaly where algorithms like to go 25 to 30 or 50 on NQ. ES has a high tendency. I'll do this, so I don't want to leave out the ES traders. ES has a really high tendency. We're not in it today. So it's kind of a purple cow, not impactful. If you go back to overnight, ES has a tendency to work 11. If it fails, back to the roundy at 0, 0. And what do you know? Our sell target's down here. So ES has a tendency, if it fails 11, to work back to 0, 0. Now, overnight, did we fail 11? Nope. There's no price acceptance under here. What is price acceptance for me? Glad I asked. For me, price acceptance, I go to a 2-minute chart, and do I see an open, high, low, close below that level? If the answer is no, this is support. And again, support is until it's broken, open, high, low, close underneath it, we move back up to it, and then it can be resistance. Doesn't mean it's guaranteed to be resistance, but it could be resistance. But if you go over here and you look at Friday, where did we run from? There's 0, 0. Where do we run from? 90. NQ, ES runs from 90 to 0, 0, 0, 0 to 11. 11, 0, 0, 0, 0 to 90. If there's a mid in the middle of them, 100%, it'll test it. Like right here. Up, test, and then it finished. We pushed to 11. We came back down. Did we retest here? Nope. Going back up to the next zone. We get above this zone. We come back. We test this zone. Did we get below this zone? No. This zone is closed. This zone is open. Longs. What do? We push up to the next zone. Get above the zone? Nope. Coming back to the mid. Where's the mid? There is no mid because this is Sundays. These ranges are for this week, not last week. But even last week, still the price moves harmonic zone to harmonic zone, back to the mid. There's no mid in between because we're between weekly sell trigger or weekly sell trigger and weekly buy trigger. So when you move over here, this is where we're at. And again, we've tagged these harmonic zones. ES, the harmonic zone to the upside, is 9.6 points. Who would not want 9.6 points on an ES contract? That's an average rotation size, a harmonic rotation size. If you guys know Order Flow Labs, that's basically Order Flow Labs. We just provide it to our members for free. It's part of the script. Is it going to change your trading? No. Can it help you? Yes. If you're not disciplined, don't know what the fuck you trade, don't know your entries, your profit targets, your stop losses, how much money you should risk on a trade, whether you should trade ES or MES, NQ or MNQ, RTY or YM, or gold or natural gas or crude. If you don't know what you're trading, these levels aren't going to help you. If anything, they're just going to accelerate your demise because you're going to get in a trade. Look at this. ES, 2-minute chart. Did we get an open, high, low, close above the midpoint? No. That means the midpoint is still resistance. Well, what about price action above it? That's liquidity. Engineered. right? How many people were short here and got stopped out? Yeah, that's market maker's favorite trick. Y'all put a trade in, and you're sitting right here, hadn't taken a breath for fucking a minute and 35 seconds, hoping they don't move it one tick higher and you get stopped out. And then what do? They move it lower, you exhale, you take another breath in, and boom, they stop you out. And then what happens? Boom, they fill out your thesis. That's why these zones are important. If we don't get above the zone, it's resistance. Now, does it mean we're going straight down here? Nope. But if you took a short at the top of the zone at 56.30 half, and we're trading right now at 56.29 quarter, and you got 5 ticks on an ES contract, are you feeling good about it? Yeah, it's a good trade. It's a smart trade. Why? Because if we do get an acceptance above this, what do? We get stopped out. This becomes support. We get long, and where are we targeting? Back up here, weekly supply. That's just trading 101. One thing that you guys need to do, I don't care if you're with ITG or not, you guys need to get used to getting on a 5-minute chart for reference and start looking at wicks. Or even better, go to a 15-minute chart and go look for wicks. Why? Because the wicks tell you a sign of exhaustion. And look at the high point today on ES, 945. Look at that top wick on a 15-minute candle. This is value. This is where value stops. People can talk about low value area, high value area, volume profile. That's all fine and dandy. Show me a 15-minute chart, and I'll sit here and I'll show you where value is on the upside and the downside. And I'll go right here, and this is where we closed. We gap down on this candle. So in the event that we take out this candle, I guarantee you, if we take out 56.1875, we're going to put in new lows for the week. We will go from there down to weekly demand. Guarantee you. And we're now trading inside value. People will be like, inside day, outside day, we're in balance. You know, I'm a one-time framing up guy. I do that. That's important. But as far as value, here's ES. And this is theta. And so if we get above this zone, longs only. And I want heavy longs. If we get below this zone, shorts only, and I want heavy shorts. Why? Because we broke structure. Where did we break structure from? Right down here. So what is this? Demand zone. So if we breach value, and that's the lowest 15-minute close this week, if we breach value right here at 56.18, where are we going to? This demand zone that was created. And it's confirmed because we broke structure from Friday. Simple. But we make it so complex, and you don't need to. And guys, if you're struggling with consistency and some of the stuff resonated, maybe make some money this week, get $100 from PVI, get $100 from the OPM, make $100 and then reinvest the $100, spend a month with us and learn. And again, you'll take away far more money, far more tools than you ever paid for in a month, I promise. I don't want people to come in and learn and leave after a month because there's so much free alpha that I can't copyright, I can't protect it. It's just it's the nature of it. But at the end of the day, or do people share my levels and my stuff on other Discords? They do. It doesn't help our community. Our job is to try and grow our community so we can drop our member fee, and I can pay contributors, income, so we can have more contributors that offer more services, more mentorship for more people. I mean, one person can only do so much. But just know that ITG is not me. Yeah, I might be, a managing partner per se. I'm one of 4 owners. I don't have majority control. I got a vote, just like the other 3 owners. We got a dozen contributors and probably 50 people that are volunteer contributors and do a lot. And so again, it's not a one-size-fits-all. I talk fast. I've been doing this for a long, long time. I do assume people know more than they do at times. That's a fault of mine. I got a decent sense of humor. I got real thick skin, and I got a heart to help people. And that's the end of the day is, helping you guys be more financially secure in your family. Get this stuff started. Learn slowly. Earn a little bit of money while you're learning. Get better at it. Get better at it. Get better at it. Trading is this, guys. Trading is not taking a strategy and getting it right and making money. Trading is getting a strategy, mastering it till you can't fucking lose. You can't lose. I have not lost in a PVI trade since December of 2020. And I lost on that one because I was on an airplane, Delta, to Atlanta, Georgia, and the Wi-Fi went out. You trade it till you cannot lose, and then you go on to the next one. What do? Standard American way, lazy. We get in, we make a little bit of money, we level up, we make a little bit more money, we level up, we blow out, and we say, that shit doesn't work. We don't do our homework. I spent over 16 hours from Friday's close to Sunday night ETH open, over 16 hours in the market. Why? Because I want to take my $2.5 million net worth to $5 million. And I want to take my $5 million to $10 million. And then I want to do this shit for free. That's why. That's why I do mine. But again, I love doing it. But again, tough love too has got to come in. You got to be accountable. You got to be disciplined. You got to be willing to put in the work. Guys, in life, man, if you want to take a hard job, then and it's hard, and your teachers are hard, and your boss is hard, and the systems are hard, and you got to grind, and you wonder if it's worth it, the rest of your life, all the other shit's going to be easy. But man, how many traders, they want a custom built $2.1 million home, and they want a 50-cent fucking trading system. Guys, you don't get a gourmet meal on a cookie cutter budget. You don't get a custom built house on a cookie cutter trading system. And so you got to constantly learn. Do the stats play out? No. There's some days where the stats are more important than others. There's some days where the internals, advanced decline ratio, advanced decline volume, the trend, the ARMS trend index. There's some days where that is a fuel gauge and will tell you when the market's out of gas. There's some days it doesn't matter. There's some days the volatility component, the VIX futures, short-term futures, VIX 5-day, VIX 9-day, VIX 10-day. There's some days it is everything. There's some days it's irrelevant. There's some days the dollar matters. There's some days the dollar's irrelevant. There's some days the bond market matters and interest rates matter. There's some days it's irrelevant. There's some days Asia matters more than Europe. There's some days Europe doesn't matter at all. And 11:30 doesn't change anything. Again, there's relationships. And again, it's not simple. It ain't supposed to be. I don't know where else I can retire from the military and I get paid $1,500 a month, 100% medically disabled, is a captain promotable in the United States Army, and they pay me $1,500. I've had 27 surgeries, about to have my right leg amputated. I have not worked since the day I got out of the military. I've done this. I've never had to go take another job. I've worked because I wanted to, but I've never had to. We always talk about love what's in the work. And guys, when you're passionate about it and you love it and you're like, man, this stuff can set people free. It can set people free, but it can also be a destruction. And then the warning that I'll leave you guys with is that be careful because trading can become addictive. And if you're into getting into prop firms and eval accounts, for $33 or $50, I love it. I think it's great. I just think there's one thing that I have to make everyone aware of. Guys, trading is an endeavor to change your life. It's not a fucking video game where you got unlimited spawns. It is not a video game where you get killed and you get to respawn. Right? Matthew will tell you. This ain't going down range playing fucking laser tag or with Miles gear. And so if you take it with the mentality, if you take it with the mentality that says, you know what, look, if I will sit in my chair and I'm in business mode, I'm in no bullshit mode. Yeah, I can joke around a bit. I am focused. Here are my 3 strategies. I tell everybody, man, grab 5 quarters. Put 3 quarters on your right side of your keyboard and 2 on the left side of your keyboard. If you don't hit 2 of your first 3 trades for the day, you're done. Why? Because you need to focus on your entry and you need to focus on your system. And if you don't know how to manage a trade and you're sweating your balls off and your sphincter is eating your body because you're in a trade, then you need to go through and get with somebody and say, okay, I'm going to do trade management where I have a target, a profit target, and a stop loss, and I'm going to let the computer manage my trade. And I'm going to focus on my entries. What are they? This might be a good one right here, right? We talked about it a minute ago. Boom. We pushed up, all wick, no value above the resistance level. ES coming back down, hadn't moved yet. That's a 15-minute chart. That was a good short if you took it. But if you don't know how to manage a trade, set up your trade management on your broker dealer, whoever you're clearing through, or prop accounts, set it up and you focus on your entries. And how do we focus on our entries? Don't do it till you get it right. Don't do it till you're feeling pretty good about your entries. You do it till you can't get your fucking entries wrong. You master it. And you find what your A+ is. And then guess what? If you go in and you're in Discord and you take a trade and you get stopped out and it wasn't your A+, you go look in the mirror and you smack yourself in the face. Because what we do, it's just a prop account. It's only $30. I'm my own worst enemy. You know why? I'll put $150 in Apex. I'll get a $1,500 payout. That account's free. What do you think I do with that account? I blow it like it's fucking Monopoly money. I'm on prop account 94. I made over 100 grand, well into the $100,000 on Apex last year. I ain't doing as well this year. Why? I get an eval. I pass PA. I take the PA. I invest back in more evals. I take the PA once I got to withdraw, and it's free, and I use it as a hedge for my real money. But I haven't lost any real money in like 3 years in the market because I stick with my live money, my real money. I'm below my $2 million threshold because of our house situation. I'm not comfortable being below the 2 million. I promised my wife we wouldn't be below the 2 million. We're below it, so I don't gamble with my real money. I don't trade with my real money, not often. And so I do it through the prop accounts. But it's just one of those guys, you got it, and it's hard to get discipline. It's good to be in a community that's going to help you bring about discipline. But accountability, if you lie to yourself, you're fucked. Seriously, excuse the language, but if you lie to yourself, you got no chance. Why? Because then this becomes social. And I want people to see my good trades. That's why we don't typically post profit P&L. Because then it's the comparison. What I talked about earlier. And if you're comparing yourself to others, then you're either superior or inferior, and neither's good. It's not good for you. It's not good for them. It's not natural. It's not teamwork. And again, I preach a lot about it for people that are not ITG guys. But again, this endeavor gives you a phenomenal opportunity. But get into a spot where you can learn and earn some money. But earn while you're learning. And you're not paying market tuition. Now, anybody that joins ITG, I will tell you, I will ruin you. You will never have these home run lotto. You will never have these home run lotto trades. Just don't do it. It ain't worth it. All right, guys, I got to go meet 2 guys for dinner. I don't know if they recorded this or not, but again, I'm around. Guys, on Reddit, stick with subreddit. Seriously, stay in subreddit, ask questions, and let us help you make money. And if you can make money, then think about reinvesting some of the money. Come in for a month. Just know that don't come in for a month. You're going to be gone for 2.5 weeks on vacation. Just wait. Because it's fast, it's furious, it's like this every day. I'm telling you, you're going to knock the fucking cover off a fire hydrant and try and take a sip. That's how it is. But that's what happens if you try to take 30 years and what we've done in the market and put it in. We got a whale. I mean, the guy makes more money than I could ever think of in the stock market. And I mean, shoot, I think he's up like $1.67 million in his 20 Apex accounts in 42 days. Like what? They're PAs, and he's on probation. Ron, I think they do $99 for your first month. But again, guys, don't use this YouTube to join. Use the YouTube to go, you know what? I'm going to take, there's 2 or 3 takeaways. And I'm going to go back and I'm going to listen to it and I'm going to say, okay, these are 2 or 3 things that I can see myself doing because they're similar to what I have experience doing. And I'm going to get better at trading at these 2 or 3 things. And I'm going to follow on Reddit. I'm going to ask questions. I just look at it like somebody comes in, they join for a month. They've never talked on Reddit. They've never asked questions. They come in, they're lost, and it didn't work for them. What if you spend the next 20-some days asking a lot of questions? There's not a single member in ITG that will not stop everything and answer your questions. I mean, we got a guy our whale today. He's out walking his dog and he jumps on stream and starts teaching. And our members love it because they don't have to hear me all day, every day. And he's teaching, literally, he's on his cell phone, walking a dog, and he's talking about start looking at shorts here, cover here because of this, because of that, and members are engaged. It's phenomenal. But if you've never traded futures, your head's going to spin. You're going to get vertigo. I just love it because there's so many opportunities, and that's why we go by ITG. It's a lot of independent traders, and we formed a guild, and there's a lot of people that do a lot of things. Is there a right way or a wrong way? No. There's a lot of ways to make money in the market. Your job is to find your fit. And again, I hammer it hard, but here's the deal. You put blinders on until you master your fit. And if you lose money because you took a B+ trade, good. I hope you lose more on your next one. And if you take a C+ trade, I hope you blow the fuck up. Because you start with $170,000 and you lose 100 grand and you get serious about it, it's 70 grand, and then 3 years later you'll be at 350. But if you start with 100 grand and you never get serious about it, you'll blow up. Yeah, again, Matt, the intent is to try and get this lowered. But the intent is we're trying to pay our contributors as well. So it's kind of a deal. I'm still trying to get the whale to, if we can if we can get Daryl to pay him, 1.6 million out of Apex, maybe we got a chance. He's one of our, again, guys, it's just been wonderful. Look on the stream real quick, and you see now, look at ES. What are we doing? We're taking out resistance. Previous high, we're taking out our zone. We've opened the gate here to weekly supply. Look left. Look left. And this is what we've got. This is our next structure that the market's going to go through. Is there liquidity from here? Absolutely. Candle, 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 right here. Twin tops, 2 5-minute candles. Oh, we closed here, we opened here, no wick. No wick up here. What does that mean? That means that all the people that got long on this candle, they're underwater. And they've been underwater since 10 o'clock this morning. Right here. I don't even need to draw it. I call them twin towers. That's some of my price action stuff. All these people that got long on this candle, they are underwater since 10 o'clock this morning. You think the market's going to get up here and rescue them? You think if the market gets back here and they've been long since 10 a.m. underwater and saw all this blood red, you think they're looking to get out? Absolutely. That's internal liquidity. Now, you think a market maker can go right up here and get them jonesing? Get the sweaty palms on that mouse? Get that mouse jumping around? A little irky-jerky on the table and then pull it back? Absolutely. But it's where? Yeah, and again, Matt, the whole issue about lower price, more people, we've got a phenomenal community. And so it's good to bring in, 5 or 10 people a month to keep the community, because we've been together since 2020, and not ruin the community. Because the community part is also encouraging, uplifting. We don't have any drama. We don't have any political bullshit, just me throwing out the stupid stuff. But we don't have controversy. And life's too short to put up with that stuff. And, Austin doesn't have it in his room either. And that's great. That's the way to do it. And once you got a community, you want to protect it. Why? Because it's fun. I mean, half the days I do work, I do the work because I can't wait to share this stuff and watch people show their P&L. And people DM me their P&L all the time. I asked them to this morning because we opened the market. We were spot on. We're going to short the first 2 minutes. We're going long for the next 5 minutes. And then we're taking the big short back to set. And it was bing, bing, bing. And it was like bam, bam, bam. I mean, we had kept up, $79,000 in the first 35 minutes of the day today. And again, he's got a bigger account. He doesn't even talk. Most of our normal traders don't even know him. And he sends me a DM, and I hadn't talked to him in 4 weeks. And he sends me his trades. And I'm like, dude, that's just great. And you worry about people. It's like the military, man. To hear somebody that's gone dark, you hadn't heard from them in 2 or 3 years, and they just send you a text out of the blue, man, I was just thinking about you. Man, it's so refreshing. Those are the little things that make your job, it makes it worthwhile. All right, guys, I got to run. I cannot be late. Yeah, again, EJ, don't. And again, come when you're ready, guys, and come make some money first. And then come. Here we go. There's the liquidity run we just talked about, right? Okay, so here's another one. Look at your price range, right? We just hit a previous candle. Once we took out this previous candle on ES, 2 to 2.25 points, usually 2. You gotta be kidding me. 2 points. You didn't do that. 2 points. We take out that candle. 2 points puts us right here. So watch ES hit it, and then watch people short. First touch reject, a weekly supply, even though we took it out already. All right, guys, I got to go or I'm going to be late. I'll get in trouble. Peace, love. Y'all be good. Again, there's no pressure in joining, guys. Interact with us on Reddit. Interact with us on Twitter. We're working. I think the owners, we're meeting tomorrow night up in Denver. We're talking about doing a free section, partitioning off some of the Discord, so it'll be free. We'll get you guys in and spend a lot of time doing this stuff once or twice a week. And again, keeps community. There we go. There's the liquidity run. Now what happened? All these guys that got stopped out for par, what did we do? They ran their stops. That's all they did. All the guys that got short here this morning, smartest guys in fucking Rome right here. And what do they got now? Nothing. If you don't take profit, man, you won't go broke if you take profits, but you got to understand it. You got to be able to peel on the way down. You got to be able to look at the market and understand it. There's so much to do. So much to do. And teach and talk through. But guys, you got to keep it simple. How much stuff we got on our charts? None. We don't even need this. We don't even need all this stuff. I need this one. These ranges are phenomenal. And again, one of our members, huge respect for him. Order Flow Labs guy forever, for years. He created this script for us. All right, I'm out. Y'all, peace.